everybody, it's Lynnette Khalfani-Cox, the Money Coach. I'm the co-founder of AskTheMoneyCoach.com and Money Coach University. Today I want to talk to you about home ownership, and in particular, I want to share with you 5 rules for successful home ownership. I want you to think about these rules as if they were sort of the commandments of home ownership, the very principles that you need to follow to be a successful homeowner for years or even decades to come. You know, it was only about a decade or so ago during the 2007 to 2009 mortgage meltdown that we had so many Americans across the country in foreclosure. I don't want that to happen to you. So I want you to follow these 5 commandments, if you will, these 5 principles for successful home ownership in order to make your homeowning experience a great one. So rule number 1 may sound kind of simple, and pretty obvious, in fact, but rule number 1 is always pay your mortgage payment on time. Now, again, I know that sounds simple, but for some reasons, for some people, it can be a lot harder than it sounds. Sometimes people pay their mortgage payment late because they just forgot. They got too busy, they had obligations with work or traveling. Maybe a spouse thought the other spouse had paid the bill, and that spouse thought the other party paid the bill. Maybe you were just a couple days late. Maybe you didn't put it in the mail on time. Whatever the case might be, sometimes people pay their mortgage payments late, and you want to avoid that whenever possible. Now, the good news, of course, is that banks will typically give you a 10 to 15 day grace period to pay your mortgage payment and not get assessed a late charge. So if you haven't hit that 10 or 15 day mark, you won't have anything to worry about. But certainly if you are 30 days late, then you have more financial repercussions well beyond a late fee on the mortgage. If you're 30 days or more late on a mortgage payment, of course, your lender can report you to the credit bureaus, to Equifax, Experian, or TransUnion, and you don't want to have that kind of a ding on your credit report. So do your very best to always make your mortgage payment on time. A couple ways you can remember or strategize around doing this is 1, you can set up your home mortgage payments on automatic deduction. Do an electronic bill payment arrangement so that the money gets taken out of your account automatically every single month and gets to your lender on time. Also, it's a good idea to put some cash aside, some reserves, if you will, in case for whatever reason you can't make the mortgage payment or you're late paying it because you didn't have the funds for whatever reason. It's always a good idea to have money on the side in reserves to help with your home ownership responsibilities. And of course, while you're budgeting, make sure that you set the correct financial priorities. In my view, home ownership should be at the top of the list. So as you're assessing all of your bills, whether that's car notes or credit card bills, student loan payments, of course you have to buy food, but you want to keep that roof on top of your head. So make your home note a priority, okay? Second rule for successful home ownership has to do with your property taxes. You always want to keep up with the property taxes that you owe. Now, some of you, of course, are very much aware, as I just mentioned, the mortgage meltdown that happened a decade or so ago and the foreclosure crisis. Well, it's not just those folks who have missed a mortgage payment who are susceptible to foreclosure. The fact is, if you don't pay your taxes on your home, on your single family home, your condo, your co-op, whatever it is that you own, you are also at risk of foreclosure. So if you want to be a successful homeowner, make sure that you always pay those property taxes on time as well. For some banks, they will require you to have your tax payments built into your mortgage payment. That's typically done if you put down less than a 20% down payment. The banks will have an escrow account where you set aside money, and that a portion of those funds go towards making the tax payments. Frankly, that's a good idea, especially for those of you who might be entrepreneurs, who you don't have a regular paycheck and you don't have a exactly steady source of income coming in every 2 weeks, for example, like W-2 employees. It's a good idea actually to have those tax payments built into the mortgage payment so that you can ensure that those property taxes always get paid and you don't put yourself at risk of losing your home, okay? Principle number 3, you always also want to make sure that your home is properly insured and consistently insured. Now, again, if you've taken out a mortgage, a bank will typically require you to have homeowners insurance. And again, this is for your protection. A basic homeowners policy is going to protect your house, which could be, for many of you, the single biggest asset that you own. It will protect that home against risks like fire, for example, and other catastrophes. The fact is, though, insurance in some parts of the country can be very expensive, and I, of course, understand that, especially if you live in areas where supplemental insurance might be required. On a basic insurance policy for a homeowner, you can typically expect to pay about $500 to $1,000 or so per year, and that's just a national average. But if you're in certain states, like perhaps earthquake-prone California, you may need additional insurance in the form of earthquake coverage. Or perhaps you live in Florida where there is a higher risk of hurricanes, so you might need to have extra coverage for that. The idea, though, is to plan and think ahead to make sure that you have adequate cash reserves to be able to pay whatever homeowners insurance premiums are required, so that if a natural disaster of some sort does strike, you don't risk having your house sort of wiped out in the process, okay? So make sure that you consistently keep your home insured and that you maintain adequate home ownership coverage as well, okay? Homeowners insurance covers as well. The 4th rule for successful home ownership is all about keeping your house in the tip-top shape that you can possibly keep it in the best possible condition. Now, it's easy after you've been a homeowner for a while to start to let things slip a little bit. Maybe you don't clean up as much or pick up as much or do as much repairs or as much renovations or improvements or upgrades. You don't have to knock yourself out and over improve a house, but you certainly always want to keep everything up to code and you want to keep your house looking good. This will actually help you down the road in so many ways. It'll give you a lot more financial options in the event that you want to refinance. Well, your appraisal will come back with a higher number if you've maintained your home very well. In the event that you want to sell, an appraisal will also need to be done. A buyer will have a home inspector who will come in as well. So you definitely want to keep your home looking good. Just think about the basics when you were looking for a home, and perhaps you're looking now for a home. Don't those homes that have great curb appeal to you? So you want to do the things that keep your house looking good. And nobody likes to see an eyesore in the neighborhood, right? But keeping your home in top condition is a great thing because not only will it improve your own value in the house, you start to build up more equity by having a house that has, windows that are functioning and properly working, electrical upgrades, if those need to be made or repairs. All of those things will, of course, increase the value or at least maintain the value of your home. But even beyond that, you will enjoy living in the house. You'll enjoy your home more if everything is in the best possible working order and in top condition. So make sure that you follow that rule as well. And then finally, the 5th rule is to properly manage the equity in your home. Now, again, once you buy a home, you'll get into the property with a certain amount of equity, right? So if you make, for example, a 10% down payment on a house, then you go in with about 10% worth of equity in that home based on the value of the property. Afterwards, though, the managing of the equity comes into play as the house starts to appreciate in nature. It appreciates in value in a couple of ways. Through market forces, if the prices in your neighborhood just rise, the home prices rising means that your equity also grows. But also because every single time you follow rule number 1 and make your mortgage payment, you're paying down a portion of the principal balance that you borrowed as well as the interest. And by paying down your principal balance, you're also building up equity in your home. Some people have squandered their equity though. they've used their homes as piggy banks and tapped into it for reasons that were not wise. And I want to encourage you, if you ever take out a home equity loan or a home equity line of credit, and there are many good reasons to do so, but I just want to make sure that you really value that property and guard your equity and tap into it judiciously, not for frivolous purposes and certainly not using it as kind of an ATM machine. So guarding the equity in your home also helps to maintain the value of what is likely your single biggest asset. So following these 5 rules will make you a more happy homeowner. It'll promote the values of sustainable home ownership, which is really what all of us homeowners want, right? And it will make that house a lot more financially tangible for you in terms of your ability to sell it down the road, to tap the equity in it when it's prudent to do so, or to ultimately have a house that you live in completely debt-free. Now that's the ideal for a lot of people I know. Again, this is Lynnette Khalfani-Cox. I'm the Money Coach. Thanks for watching.